Is your business a pass-through entity? Then this video is for you. Today, we're talking about how you can use the pass-through entity tax election to dodge the dreaded $10,000 SALT cap and save serious money on your tax bill. Here at Lavender Accounting, we're here to help you count them all and keep it all, legally of course. Make sure you hit that subscribe button so that way you can follow along and find more strategies to help you save tax dollars. You might be saying, why does this matter? Back in 2017, when the Tax Cuts and Jobs Act was passed, effective January 1st, 2018, that moved the SALT limitation or the SALT deduction for Schedule A to $10,000. Before, you used to be able to deduct all the state and local income taxes you were paying as itemized deductions. That cap runs through the end of 2025. But starting in 2026, the OBBBA, One Big Beautiful Bill Act, officially increased the cap to $40,000. That's great news down the road, but for this year, we're still stuck at the $10,000. That's why the states rolled out the PTE elections. It's one of the active ways right now that allows you to break through that threshold and not miss out on deductions that you normally would have had back in 2017. So who actually gets to use the PTE? Not every business does qualify. Partnerships qualify, S corporations qualify, LLCs tax as partnerships or taxes as corporations qualify, C corporations, sole proprietorships that file on a Schedule C, unfortunately, you do not qualify for the PTE programs. Some states do limit what owners qualify. Many only allow individuals or trusts, not big corporations, to benefit. There's a few states that say only resident owners can join the fund. More than 36 states, plus New York City, have PTE programs. If you're in Oregon, like me, we've had the PTE election since 2022. California, New York, Illinois, and a bunch of other states offer it as well. Each one works a little differently and has specific nuances, but the big idea is the same. The business pays the tax at the entity level, and you get the credit on your state income tax return. Does your state allow PTE? Drop your state below in the comments, and I'll let you know if your state qualifies or not. All right, let's look at some numbers using two trainers, Ash and Misty. Both earn $200,000 from their businesses. We'll assume a 10% state tax rate and a 22% federal tax rate to keep the math simple. Ash does not have the PTE. He pays $20,000 in state income taxes, but thanks to the SALT cap, he can only deduct $10,000 of it. His federal income is $190,000. Federal tax at 22% comes to $41,800. Add back the $20,000 for state income taxes that are paid, Ash pays a total of $61,800 in state, local, and federal income tax combined. Misty, on the other hand, with the PTE, her business pays the same $20,000 in state tax, but this is at the entity level rather than the personal income tax level. That full $20,000 is now deductible, reducing her pass-through income to $180,000. Her federal tax at 22% is $39,600. Her state tax credit that she got from the PTE of $20,000 wipes out her entire state tax liability. This makes Misty's total tax $59,600. When we compare the two, Misty saves $2,200 just by making the PTE election. That's super effective against the SALT cap. All right, so the big question, how do you actually elect into the PTE? Each state's process is a little bit different, but here's the general flow. First, decide before or when you file your state return. File the election form or check the box on your return. Third, make sure you pay the estimate PTE taxes if your state requires them. Finally, when you file, the entity reports the tax paid and the owners get a credit on their state tax returns. One important note, once you elect, you're usually locked in for the year, so be sure to plan ahead on this one. All right, trainers, let's recap. The PTE is a workaround for the $10,000 SALT cap. It's available to pass-through entities like partnerships, S corporations, and LLCs that are taxed as partnerships or S corporations. More than 36 states already have the programs in place. In our example, Misty saved $2,200 just by electing into the PTE. And lastly, you make the election at the state level, usually by each year by filing the right forms and paying in the correct amounts. Here's the thing to note, trainers. PTE elections can be complicated. Every state has its own rules, deadlines, and traps for the unwary. This is where working with a tax professional who understands both the state rules and the federal limitations and interactions can make all the difference. At Lavender Accounting, we're here to help decide if this election makes sense for you and your business and help guide you through the process. Be sure to check out our other videos on tax and accounting topics, and don't forget to subscribe so you don't miss out on more tax strategies made simple. And as always, we're here to help you count them all and keep it all legally, of course. See you next time.